the wave trading technique, our simple formula for massive success. This is an easy trading technique to employ. I want you to practice it on your favorite stocks and ETFs and see if it is not amazing to you. I have been seeing so much wonderful success with this. I want to share it with you. It is a different way of doing things. A lot of the same techniques that we have employed and taught for years you'll find here, but we use a different indicator. We still use our half-day, 2-day, and weekly time frames, but it is different. Let's jump into it. Here's how it works with a very simple chart. It uses something called the STC indicator. It is a very simple indicator at the bottom of the screen. It goes from green to red for down movement and from red to green for up movement. Very, very simple. You don't have the MACD crossings and all that. It just changes color for you, and you can see when things are going up and you can see when things are going down, and you have that price movement on your Heikin-Ashi candlesticks, again, is complemented by this very accurate indicator. Now, we use, of course, Heikin-Ashi candlesticks. I just referred to those. Here's an interesting thing. We use a 200 exponential moving average as a qualifier for long and short positions. What does that mean? That means this golden line here is the 200 period moving average line. Now on the half-day chart, of course, that is 100 days. On the 2-day chart, that'd be 400 days. On the weekly chart, that would of course be 200 weeks. So these represent, for price movement in each of those time frames, significance. And we only look to jump into long positions when price is above the 200. We only look to jump into short positions when price is below the 200. So this plays a key role in this method. We use the average true range for setting profit and loss band measuring tools that we use on these charts. And by the way, the chart you see is available at TradingView. That is where we have set up these charts. We're happy to send you a copy of our chart. But we have set up on that chart average true range. You can see it right there. We use the open, high, low, close divided by 4 for the lower band, and the open, high, low, close divided by 4 for the upper band. And you can see the numbers right there. That is where we set. And again, this falls in line with our maximizing success with the ADR training. We set our loss band down at the bottom. We set our profit band, and that is right there on the average true range. And 2 times that is where we set our profit. Now, that is in line with our hard and fast rule of a 2-to-1 risk to reward ratio. That means we're risking 1.97% loss to gain 3.94%. Now, again, we do that over and over and over again. Not the same percentage, but the same 2-to-1 ratio. Those of you who've taken our always winning strategy, you know that employing this means we only have to win 4 out of 10 trades to be successful. If you're winning 6 out of 10, 7 out of 10, 8 out of 10, then you are jamming. You can take that training and see how incredible the profits are if you do that. We want you to practice trade this and understand exactly what's going on. So let me give you the way that we jump into trades and how easy it is to utilize this type of training. Now, what we look for, and this is a successful trade I just did as I record this in mid-April 2022. This is a trade I did on April the 8th. You can see it here on the chart. I jumped in when silver on the half-day chart price was just above that 200-period moving average line, exponential moving average line. The STC indicator went from red to green. I then executed my trade during that time period. That was in the afternoon because this is the half-day chart. I jumped in. I wasn't particularly I wasn't looking for any super jumping in point. I just saw when I did my review, I reviewed the charts, of course, twice a day, in the morning and in the afternoon. I noticed in the afternoon things had switched over. So I went ahead and did my entry point. Now there were a number of things I was paying attention to. I had backtracked and seen how accurate the STC was in silver for back practice trades. So when it switched over, I gladly went ahead and pulled the trigger. I saw that price was above the 200 EMA. I also looked at the 2-day and I also looked at the weekly. And I saw on the 2-day price was also above. That made me feel good. It was above the 200 EMA on the 2-day. I noticed on the weekly also price was above. So that made me feel good about jumping in. Now you can see that when I jumped in on the 2-day chart, the STC was negative. Now I looked at the STC also on the big chart, that is the weekly, and as we say, all things being equal, market tends to move in the direction of the largest chart, which is the weekly, and that was green. So I felt good. I had a little bit of trepidation because the 2-day wasn't going in my direction, but I was hoping that what happened later did when I was just ending my trade. That is, it hit my 2-to-1 reward ratio and I automatically sold out because I set that as soon as I entered my trade. As soon as that order was filled, I knew exactly the percentage I wanted to gain. I went ahead and put in a good till canceled sell order and boom, knocked me out. But look what happened. It turned green. So the 2-day was it was primed and ready to fire, and it did. So I had a good feeling about jumping in the trade to begin with. If it would have failed, no problem. I would have taken a small loss and I'd have been out and gone looking for the next good trade. Now to tell you just a little more about the STC, what is it? Well, it was created by Doug Schaff back in 1999. It's a type of oscillators based on the assumption that regardless of time frame, price accelerates and decelerates in cyclical patterns. Now, how does it do that? Well, it's a complicated formula. It uses exponential moving averages like the MACD, and it also uses stochastics. So it has a novel cycle component and improves accuracy and reliability. Unlike the MACD, that is simply computed using a series of moving averages, the cycle aspect of the STC is based on periods of time. That's why I like it. I've been using it. I find its accuracy to be very helpful, getting me into trades before the MACD would have. Because unlike the MACD that's a lagging indicator, the STC is a forward-looking leading indicator generating faster, more accurate signals because it considers both time, that is cycles, as well as moving averages. I want you to start practice trading this. I want you to see how it works for you. You can easily set up this little price, profit and loss mechanism on your charts to see how well you do, and you can start you can start utilizing and employing the STC to help you find potential trades, keeping in mind a number of things. The most important, price is above for long positions, the 200 EMA, and below for short positions. Always check out where your other charts are so you know that you're not betting against a trend that you might be trying to jump into a very short-term move. You've got to be careful. Now typically, if it's going to be a wrong move, then you've jumped on the wrong side of your 200 EMA. So you have that going for you, as well as knowing where your bigger charts are. Those things will help you a lot. Also, your Heikin-Ashi candlesticks, using, again, your average true range, which helps you set accurate loss bands so you just don't get hammered if things don't go the right way. Now, what are our goals for utilizing the wave trading technique? It is to increase the likelihood of a successful trade by what? The use of a leading indicator, that is the STC for accurate trading choices. The establishment, this is number 2, of a simple and effective formula to increase profits. That again is that 2-to-1 risk to reward ratio. And when you hit that loss point, you're out. You're just out. You don't stay there and get yourself hammered. We have taught for years the importance of minimizing your losses. If you will just do that, you only have to win 4 out of 10 times to see success. But you've got to cut those losses. The reduction of poor entry points and bad trades, and that is utilizing the STC, the 200 EMA, the profit and loss bands, all those things. The creation of a system that works in all trading situations. I want you to employ it in every practice trade you can think of and see how well it works. It also encourages, this is something I hadn't touched on yet, reverse thinking when markets redirect. What do I mean by that? I mean that if price all of a sudden plunges below the 200 period moving average line and you see it go from red to green or green to red, the opposite direction, you can automatically rethink, hey, wait a minute, I didn't have this up trade work, but now I have a possibility of a down trade because things have crossed over. I can jump in and head down. Again, not just standing there wondering why you had losses and taking no action to recoup those. So again, it helps that way. It just brings insight, insightfulness, clarity, vision for what you need to do. I will share in the show notes this link if you want to go to TradingView and you wish to subscribe. That'll help out the channel, put a few bucks our way. If for some reason you're not already a TradingView member and want to go subscribe, do that. And we'll also share with you the chart you just saw. And again, we so appreciate you being with us. Don't ever hesitate to write us, cw@chartingwealth.com. Disclaimers always in effect. We are not a stock calling service. We're an education firm. We want you to practice trade with us, learn what you're doing, and master these charts for success and hopefully profit. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.